Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be taking a look at the Bitcoin dominance as well as the Bitcoin and the XRP charts. I've created a couple different charts here that give us a little bit of a different perspective, and I think they're very interesting to look at as well when switching from the linear back to the logarithmic charts. So let's not waste any more time and let's get into the charts. Use the coupon code 1776 for the entire month of July to get 25% off your first month of my Master Tier memberships on Patreon. I'll see you there. So one of the main questions that we're hearing and we're seeing all over the place right now is a pretty simple one. It's when alt season? And when taking a look at the Bitcoin dominance chart, you can see that price is traded within a confined channel for quite some time now. Going back to June of 2023, Bitcoin dominance is basically just pinballed within this channel this entire time, recently coming down here and touching the bottom on December 2nd. For a slight fake out, this was the only time that the price actually broke below the channel. Looking at it right now, you can see that we got rejected off of this bearish fair value gap right here in the red, and price is now trading down towards the bottom end of this channel, right at the top of this bullish fair value gap, both of which are on the weekly time frame. If we scroll out and we take a look at the overall pattern, you can see that we have a prevailing trend line here connecting to this second point, as well as one on the bottom here connecting between these 2 points, which gives us this nice descending triangle pattern. Price is broken out of this within the channel that I just discussed right here, but we also have 2 points right here where we can make another trend line. Now this entire pattern is capped off with this bearish fair value gap. Keep in mind this is the weekly chart. And when we zoom in here, you can see that the Bitcoin dominance basically topped out right here in this area just below this upper trend line. There's a lot of room here for Bitcoin dominance to come down. And if it does drop down to this lower trend line right here, retesting it from current levels, that would be approximately about a 25% drop in Bitcoin dominance. If price continues back up to the top of this channel, perhaps getting rejected off of this upper trend line again for a second time, if it does break through this, it will likely be limited by this upper red line representing the top of this channel. But the one thing that we're going to want to see in order for the altcoin season to really take off is to see Bitcoin dominance on the decline. But the one thing that we can see from looking at this chart is there is a lot of room for Bitcoin dominance to come to the downside. Although it doesn't quite seem to me like it's finished here. It seems like to me at the least we might see it come and retest this upper trend line. And if it breaks through this, we might even see it run a little bit longer. Now flipping over to the Bitcoin chart itself, this is also on the weekly chart. Price has also been trading within this well-defined channel for quite some time, going back to about January 2023, doing about the same thing, working its way up. When we zoom out of the pattern to get a better look at it, you can see that price has been basically going up in a straight line within that well-defined channel. And the one thing we know for sure is this is not going to continue going up forever. In fact, in my opinion, I think we are very close to seeing it topping out. But this has been an absolute massive move. Now, if you look at this chart that I've created right here, this is on the linear scale. You can see that we have a prevailing trend line here. Price touched it right here when it went on this run back in December of 2017. It came up and touched it a second time here in April of 2021, forming this little cup pattern here, then coming up for a second run before getting rejected, ultimately coming back down to the very bottom of the pattern marked by this dashed line right here. Since that bottoming out right here in this area of the chart, price has been on an absolute tear up to where current price is. Now, if we look back on this chart, you can see that it came up, set an all-time high, declined in this cup formation, came back up for a second run, taking out the previous high, setting a new all-time high before declining back a considerable amount. In this case, the price had actually fallen back about 76%. Now you can see on the current charts, we have a pattern very similar. Price came up, set a new all-time high, came up here. We actually broke that all-time high, except we did an additional move up here where price is currently trading, but it also touched that same prevailing trend line right here, almost exactly, which marks the third time this spot has been touched. Could this be the ultimate rejection right here? Sure it could. But when looking at some other factors on this chart, I've created a curved line here that represents all of the tops, as well as a curved line here on the bottom in the green that represents all of the bottoms. When we look at this, you can see that each time price traded up to the bottom of this red area, the dashed line, it was basically signaling the top of the move before we saw a major decline. It happened there. Price came up here, traded into it, hitting the second point on this upper trend line before forming the cup we just talked about, coming up, breaking that previous all-time high right there, breaking just into that curvature, then failing, falling back. When we look at price right now in accordance with this same principle, you can see that we still have a little ways to go before we would top out into that range on the red. Which means that if price continues to move up, breaking out of this upper trend line, still trading within this well-defined channel, we could see price, if it gets rejected in this area, assuming of course that it breaks through this trend line, we could see price trading anywhere from that 130, perhaps 135,000, depending on where that candle came up and touched this line. But ultimately, I think that we'll see the exact same thing that we have seen on the previous two times that price has touched this upper trend line. Sure, we could break through this and touch the red, but we now have two factors here that show us 2 points of clear rejection that have happened 3 times on the charts previously. Bitcoin is not going to go up forever. Now we can also get an alternate view of this if we switch over to the logarithmic chart, by basically looking at the outer curvature rather than the inner. Coming off of this point all the way back here on November 25th of 2013, you can see that the price moved up here, touched this curvature, was rejected. Once price recovered, retested the breakout here, going on another run, hitting a top end right here on April 12th, before getting rejected, forming that cup that we just discussed, then falling back once again to the price where we're currently trading. And as you can see, we have the same thing. There is a little bit of space here that price could move up, although it does give us some slightly different numbers. This puts us upwards of that 135,000 to about 141,000 range that price could go before ultimately hitting that line and potentially getting rejected once again. On the logarithmic chart, this prevailing trend line, instead of acting as resistance, now shows support when transferring over to this particular chart. When looking at the Fibonacci retracements, we can see that the price could potentially fall back down to 62,900 for the 618, 52,708 for the 702, and for the 786, 42,516. This could take moving well into 2026, but I'm going to make a prediction right now that we are in fact going to see the price of Bitcoin drop down to this 702 at some point, back to the 52,700 range. We also have on the monthly chart a weak doji sitting right here, which I have marked out on the chart at 42,555, which is a potential target as well as a potential point of reversal. And the same right here with this weak doji sitting down at 23,321. Although this one is much less likely than this one, you can see that when price fell back in the past, price stayed within these two areas of curvature that I've marked out on this chart, topping out on the top end of the red and bottoming out on the top end of the green. So price is basically traded within this defined area, going all the way back to 2012, 2013, each time falling back down to these lower levels, which basically at this point coincides with this area of Fibonacci retracement on the chart. Now I know I'll get a bunch of nasty comments saying Bitcoin's never going down to that level, it's never going to happen, Bitcoin's going to go up forever, Michael Saylor says it's going to continue, but it's not going to. Eventually, we are going to see an incredible retracement, and at a bare minimum, I believe it's going to come back down to 52,700 range, touching this green before making a reversal. But in the process of Bitcoin topping out, wherever that may be, on the top end of this chart, and pulling back, as dominance drops and the price of Bitcoin fades much lower, I think the potential of what we are seeing here is much greater than any of the altcoin seasons we have seen previously. I think what is being set up right here could potentially be one of the most incredible altcoin seasons of all time. And if Bitcoin did come up and top out somewhere around this red line, falling back down to this area, we would be talking about a drop in the price of Bitcoin anywhere from about 62% to perhaps 70% in value. All of that money flooding out of Bitcoin and into altcoins. Now taking a look at the XRP chart, this is also on the weekly chart. I've used the same principle that I used on the previous chart and applied it to the XRP chart instead. Now, as many of you know, in regards to my XRP moon dream, there is a coming time frame that I will be watching, which I think could apply to that. It might not, it might, I'm not sure, but I will be looking for it. But ultimately, no matter how you look at this, no matter what theory you have, no matter what your trading strategy, no matter who is analyzing the charts, there are quite a few different things that could happen here. Now, when looking at this chart, it's pretty much the exact same thing, with the exception of the price of XRP has traded within this channel ever since it first started trading, going back to 2013. So I'm going to flip over to the monthly chart because it's easier to show this. Once price broke out of this lower pattern here, going on this run in 2017, which more closely resembles the current breakout that we're seeing now than any previous season that we've seen. By taking a simple Fibonacci reading here, coming off of the high right here off of these candle bodies, coming off of the low here from these candle bodies, it gave us these numbers right here. And if we zoom in and take a look at those, you can see that price basically came up through here, hit the 702 nearly perfectly before retracing all the way back down to these levels here, which are based off of the high from these candle bodies here, from this low point coming off of this trend line here, based on the wicks of this original pattern, coming down and touching the 702 once again. You can see when looking at this first breakout pattern where the consolidation occurred, one candle came down and wicked down lower than the rest of the candles. Once price had broken out, set the new all-time high, and then retraced back to these lower Fibonacci levels, you can see that this candle right here swept all the liquidity from this previous pattern as well as this previous candle right here, before moving upwards and going on the next run that we saw, moving in to the 2020-2021 season. When we look at the current price of XRP right now, there's a couple different ways that we can look at this that I haven't marked out on the charts. By basing a Fibonacci right here, coming off of the highs of this candle body here and the lows of the candle bodies down here, which is exactly what we did on the previous pattern, it gives us these fib levels that read right here, ranging from $9 to about $12.25. I've also put some Fibonacci retracement levels here based off of the 702 from that same reading, coming off of the upper trend line of these candle bodies here, doing the exact same thing on this pattern as the 2017 cycle, which places the 702 slightly below this previous candle, which means that if price did come up and hit these, then fall back down to the 702, essentially sweeping the liquidity, it would sweep this candle here, which on this pattern is the lowest, doing essentially the same thing we saw during the 2017 cycle. Now I have this marked out. I know a lot of people are counting this here as the first wave, this the second, coming to the fourth, and are now saying that we're in the fifth wave. Now assuming that price came up into this area, hitting these Fibonacci levels, let's just say for a matter of example that afterwards we saw an ABC correction down to these Fib retracement levels here, taking out this previous low, marked out exactly as I have it here on the charts, before moving upward into another 5-wave move up. We could see something very similar to the pattern that we're seeing marked out right here, which using these levels here, which go off of the 702, marked off of this first level of Fibonacci's, coming off of these retracements right here, which would be based off of topping out on the 786, and the 618 on the Fib retracement coming off of the bottom of this pattern. These are just a guess, but it's just to demonstrate a general idea of what could occur here. Because as many of you know, in regards to my XRP Moon Dream, what I have been expecting is to see a major draw on liquidity previous to the breakout. I've speculated on this in the past and have been clearly wrong, as I was expecting something more like this to occur, where price came down, sweeping this pattern previous to the breakout, which did not occur. But when looking at the previous pattern, if the pattern we're in now repeats the 2017 cycle, perhaps we won't see that major draw on liquidity until we see the finalization of this fifth wave of this 5-way pattern, of which during the correction we would see the draw on liquidity down in this area, sweeping the liquidity from this candle here, before bottoming out and making another move to the upside to those levels that we all know are coming, which are marked out in the $21 to $26 range on these Fib levels here, perhaps even higher. Because when looking at the overall pattern, especially when looking at this particular price channel, with price trading right here, it's very likely that at a bare minimum we could see price come back up to this yellow line at some point, which can give you a good idea of some of the price points that we could see if that occurred, which could range anywhere from about that $16 mark coming out here to January 2028, which we could be hitting $60 range. But all in all, this chart follows the same premise as the Bitcoin chart. Each time the price comes down, falls into the green, it marks an area where it was the best time to accumulate. So as you can see here, once price fell down into this green area here, from the point that it entered, everything below this was the best time to accumulate. Now I've marked it off of the top of this week doji, but essentially it would be right here. So once price entered into this channel, anything below this white line was the best time to buy before the breakout. Once price traded up to the top of the channel, it topped out on this red line on this arc here before falling back down into the chart. Once price eventually got back and entered into this green area once again, the exact same thing occurred. As soon as price entered into this line here, which you could see would be about right where that's at now, it didn't leave a very big window of opportunity. But for these 8 months right here, buying anything under that entry into this green area was the best time to buy before moving upwards. Now, as it sits right now, current price is resting just above this area. And if you look at this chart, there is a long ways to go before we hit this arc again up in this area. Could it be impossible to hit this? Perhaps. Could it be hit? Certainly could. And if you ask me, I absolutely believe that price could make it back up to this line. As insane as it sounds, but when you think about that, you have to remember that there is a time element involved. I don't believe this is going to happen tomorrow. I don't believe it's going to happen quickly. This is something that's going to take time to achieve. But if we're talking 5, 7, 10 years from now, I think we'll absolutely will have touched this line, if not broken through it, higher up within this channel, within that time frame. But I've marked out a path here that could potentially explain that drop in price coming down and sweeping this liquidity down into that $1.50 range that I've talked about previously. Now let's assume that this doesn't occur here, and instead, could it be a situation to where we actually see something closer to this? Now this is not Elliott wave, this is just me using a 5-wave count as an example. Now could it possibly happen that we move up here and instead of this being the bottom, something occurs within this window here, bringing us down to this 702, sweeping this candle before moving upwards into this area here, to which we could then see a decline back into these retracement levels here before moving up higher to these ones here. So what we would end up seeing would be something more similar to what we're seeing here on the charts. And just calling it a 5-wave count to the upside, not an Elliott wave count, but just for an example. So instead of coming down and bottoming out here, perhaps we see something occur that actually brings this down here, scares the heck out of everybody, before we start to see the move up into this area, into that $9 to $12 area. But that's just an example. But all in all, when looking at this chart, you can clearly see that there is plenty of room for it, for price to move to the upside within XRP moving forward. And I think this chart right here in particular does a great job of showing you how much potential there is to the upside by using these arcs rather than just relying on straight lines within the channel, as it gives us more of a well-rounded view of how price could unfold. And keep in mind, this is on the logarithmic chart as well. So all in all, I think there is a lot of room to the upside remaining within the XRP charts. Now, coupling this chart with Bitcoin dominance dropping to the upper trend line I showed you on the chart, with Bitcoin itself potentially dropping back down anywhere from about that 53,000 to about 45,000 range, declining upwards of 70% in value, which would not be good news for Michael Saylor and MSTR, by the way. Imagine all that money coming out of Bitcoin flooding into the altcoins. And remember, the Trump election pump on November 3rd was when we started to move up, and XRP led the market, moving up and setting a new all-time high at a time where Bitcoin was actually dropping. So think about the potential of what the XRP price could do under the circumstances of Bitcoin dropping, dominance coming down, and with what we're seeing right now with Ethereum leading the market, currently being one of the only coins that I follow that still has a bullish embedded stochastic, we could see the money spilling out of Bitcoin, spilling out of Ethereum, and driving into XRP, which very well could take us up to a minimum of this range of these Fibonacci levels we're seeing right here between $9.09, $12.25. So it's just something to think about. I will also post a screenshot of this chart on my Patreon for all of my Patreon members, as well as the post tab on my YouTube channel for everybody to take a look at. So thank you so much for watching. I appreciate each and every single one of you. Have a great day.